Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market, so hopefully you can better position your portfolio. A few weeks ago on my radio show, and also not only in my wealth report but on these updates, we talked about our long-term MTI, or market trend indicator, which signaled to sell in various markets, indices, and securities. We've been reducing our risk exposure and selling into these some of these brief rallies. I expect further declines in the overall markets based upon some recessionary fears. I believe that right now investors should be a little bit more cautious with what they're doing. We use our market trend indicators for one reason: severe economic downturns or recessions, which seem to occur on average about every 7 to 8 years. The average equity market or indice will usually drop between 40+% when you go into a recession. Right now we're down around 15%. So if things really do pan out and we do go into a double dip recession, we could possibly see these markets drop another 20-25% easily or more. There's problems over in Europe. Germany's GDP growth fell off the cliff almost to zero, along with France, two strongest economies in Europe. The U.S. economy obviously is not doing much better. Philadelphia Fed survey came out, which is a survey of the region, which is a very good precursor to recessions. It dropped to a -30. Every single time we've had readings that low, every time we have gone into a recession. Now this time could be totally different. This time with this negative reading, we might not go into a recession, but I can tell you from past surveys through many years, anytime we have dropped to these levels on the Philadelphia Fed survey, we have gone into a recessionary environment. I think the government has spent a lot of money and wasted a lot of money. Now Bernanke is coming out in Jackson Hole on Friday, and if in magic he pulls out 25 rabbits out of his hat and they have a real masterful plan, we could actually see some kind of market rally, which could push our long-term market trend indicators back up and would put us back into some certain risk assets like the emerging markets and the U.S. stock market. It could be temporary at best, or it could be a long-term scenario. Bottom line is this: you need to follow an investment strategy, which includes risk management. There are times you do not want to own equities or as high a percentage. Don't let your so-called advisor broker tell you, hold on, things will come back. There are times you want to switch it up. There's times in a recession, after the bottom has entered, that you want to actually be in other areas of the market that will recoup much faster than those same old stocks you once owned. And I think this is where an investment strategy really comes into play. Unfortunately, most individuals who are managing their own money will base emotion on their decision, or base their decisions on emotion, excuse me, and unfortunately that is going to be wrong almost 100% of the time. You need to have a rules-based investment strategy. When you look at severe downtrends in the market, sometimes it makes sense to step to the sidelines until the smoke clears before you re-enter. I always make the comment, a trend is your friend. Markets are either trending up along with the economy, or markets are trending down along with the economy. Again, the average recession, the markets dropped 40% or better. The last time it dropped almost 55%. The question you have to ask yourself is, what is your risk management measures? Do you believe that we are headed for another double dip recession? Or do you believe we're off to the races and GDP growth in this country will be 3 or 4%? I don't think the latter is going to occur. I think we are definitely in a softer patch than the government anticipated in the second half of this year. I don't think we're going to have very high GDP growth, and that does make us quite nervous. But we're looking at our indicators, and a lot of our indicators are flashing. Recession is on the horizon. Now again, Jackson Hole's on Friday, and all bets could be off of a recession if the government actually pulls all these magic rabbits out of their hat and actually has a really solid plan to put money back into this real economy. I fear that's not going to happen, and I fear that what we'll have is a temporary rally at best. But we are watching all of our indicators, and we're watching which way the markets trend. What I would suggest to investors who are nervous, there's not a problem with holding cash. We are holding cash. We still own a substantial amount of bonds, which are buffering our exposure to the equity-based markets, and we hold obviously quite a bit of gold in addition to that. Now, these have been long-term holdings, and they've done quite well for our clients and our managed portfolios. But the key here is there's two things that we're looking at. A, which direction is that market going to be headed, and B, what is going to be our re-entry. We are already, again, I want to repeat this, we are already replanning how we are going to reallocate and re-enter our investment asset categories once the trend reverses. And again, we already have planned where we are going to be invested when this market reverses course. So the key is, if you haven't done proper planning up until this downturn, it's becoming a little bit late. Although if this recession really comes to blow, you still have a chance to get out some of your equity risk and reduce and get some cash now. The key though is really, what is your re-entry point, and where do you plan on redeploying that capital to recoup any loss and hopefully rebuild your portfolio to new high ground. That's what money management is all about, a disciplined, rules-based strategy. This is Brian Resney with the Resney Wealth Report. I hope this was a benefit to you. As always, if you'd like to contact my firm about managing your wealth, we would love to talk with you. Call our office directly at 800-618-8577. And make sure you do listen to my radio show this Sunday. It's going to be a fantastic show. We'll be talking, I'm sure, quite a bit about Jackson Hole and Bernanke and what's come out of that. And as always, make sure you have yourself an extremely profitable day.